FX update from Zimbabwe. Zimbabwe is allowing banks to set their own rates for exchanging US dollars. This as it seeks to ease pressure on weekly currency auctions and to tame the runaway parallel market. In South Africa, British American Tobacco South Africa says research indicates that criminals have flooded South Africa's retail market with illicit tobacco, citing a major new study conducted by independent market researcher Ipsos. The government lifted the ban on sale of tobacco products in August of 2020, but according to British American Tobacco South Africa, this has done little to curb the illegal trade's rampant growth. Mosope Arubayi, who is an economist at IC Asset Managers, joins us now to discuss with him. Mosope, good morning. Good to see you again. Yeah. I believe that British BATSA is saying that about 19 billion rand is lost a year to illicit tobacco sales. Do you think the government will take any action to curb that?
I mean, so far, South Africa has been looking to plug leakages to its revenue. So most likely, yes. The ban that they put in place in 2020 seemed more like they shot themselves in the foot.
Aha.
Because what played out was dues were not fully paid on imported tobacco, and then people got access to tobacco on the black market at a cheaper rate. And since the ban has been lifted, they've not rolled back. You still have the black market still playing, still having like a significant share of the market.
Yeah.
And BAT is probably not making as much sales as it did before the pandemic, before the ban happened. So what you'll see as a response from the government is more likely like a crackdown on merchants of illegal tobacco. I know there was a system at some point where they could trace and track people who were involved in the trade. But since this has been brought out by a company in the country, then we're likely to see them re-implement the trace and track and then probably crack down on merchants of illegal tobacco in the coming months.
All right, we'll see how that works out. Let's switch to Purchasing Managers Index. I think South Africa was the only country of about 6 that was tracked whose PMI for March exceeded February. Why is that?
I mean, with inflationary pressure everywhere, you'd expect that people are spending less, and so output will be less, and then you have the economy contracting of some sort, or growth softening of some sort. But the pattern in South Africa is that you have people front-loading demand ahead of future price increases. So as at March, you had people demanding, sectors in the economy, industrial sectors, were demanding for their stocks because they want to have it in stock ahead of future price increases. So that alone created opportunities for more people to be employed, and we saw that play out on the employment index under the PMI rating, as well as the new orders index. That doesn't mean that everything is going good. Well in the economy. It's just people being strategic in their business decisions, since nobody knows when inflation is going to go away or if it will go away anytime soon. So they're just being strategic by front-loading a lot of their demand now, as they feel prices will be cheaper now than you probably get a few months down the line.
Thank you for that explanation. So that answers that. More encouraging news for South Africa. Moody's upgrading their outlook from negative to stable. Yeah.
Yeah.
Well, why, and what is the implication of that?
I mean, it's in the fiscals. That's all I'll say.
Yeah.
Moody's has the way I view Moody's is they're more particular about what your fiscal numbers are saying. We saw the episode that happened with Ghana earlier in
where
the year.
Where they questioned the analyst experience,
so,
right?
So far, South Africa's fiscals has been beautiful, undoubtedly. 2 years consecutively, they've had their revenue surprise to the upside. We also have the windfall in the mining sector from gold and palladium. They're a they're a major player in the global palladium markets after Russia. And I mean, with sanctions on Russia, they're probably the main supplier. So they have new markets. they have a pricing edge at the moment. So they're making a killing in terms of FX earnings from commodities exports. Also, their budget seemed a bit more realistic compared to what Ghana presented last year. There was a much clearer path to fiscal consolidation, even though, I mean, in the short term, you'd expect it to breach the 70% to GDP benchmark set by the IMF. But I mean, over the medium term, you would see that decline gradually. I mean, everybody has gone through COVID, everybody has to support the economy, so it's expected that you could have a few bridges, but what was clear was the path to fiscal consolidation was pretty straightforward, especially with revenue drive over the past 2 fiscal years. It just made a lot of sense. There's also been commitment to SOC reforms. I mean, in the budget, it was clear. Even the minister had said it that South African Airways wasn't going to get any allocation this year. The ESCOM, the power company, was going to get allocation for a few more years, 4 years, after which it will probably not get any allocations. Then there's also the defense company that was just getting allocations for interest payments. So there's that commitment towards fiscal reforms as well as realistic inflows from exports, from the revenues drive and all. So it will be a tough call for Moody's not to give them a nod,
right?
With all that was going on. So yes, it's pretty much in the. I think Fitch also did a similar thing last year, but that was driven more by the rebasing of the GDP,
yeah,
which probably captured more value that the economy has to give. So the story around South Africa recently has been positive. I mean, it will take a whole lot for you not to acknowledge that.
Thank you for that. Thank you so much. So along those lines, the reducing of the COVID restrictions, right? They announced that. Is that here to stay? Much longer can that carry on?
I mean, it's good to see that countries are realizing that there's no silver bullet to get rid of COVID, and everybody just has to live with it like we do with malaria and some other ailments. So I don't see them going back on it. However, there could be incidences where you could have more waves come up. I think the world is in a better position to manage subsequent waves that come up. So I don't see them going like a full 360 from the recent relaxation that they did. And it's good for their tourism business. I mean, South Africa is big in tourism. We know that the unemployment rate is high, so probably a few more people will be getting jobs over the next few months with the relaxation that we've seen so far. I think it's a 30-day transition period, so we'll see how that 30-day pans out and see what next the government is going to come back. I don't see them going back on it. I think it's a global trend. I think Nigeria also did recently.
That's correct, yeah.
The West is also acknowledging the fact that COVID is here to stay, and everybody's going back to the office, everybody's going back to business as usual. So I don't see why South Africa should go back on the decision.
Well, everyone except Shanghai. They have some really terrible cases there. Fuel levies. The decision to reduce fuel levies in South Africa, I guess, to cushion the impact of high oil prices? I
mean, yeah, everybody in the world is feeling the impact of higher oil prices, except for maybe Nigeria, where it's subsidized, but everywhere. I mean, earlier on you read about Kenya, they're doing something. So there's some form of subsidy here and there going on, particularly in African countries. For South Africa, I think it's for a 2-month period. Yeah. Nobody knows what's going to happen after the 2 months. There's uncertainty around that. But what's good to see is that the government is actually thinking about the people, the impact on the purses of the. I mean, prices are up about 7% over a 15-month period, and that's something that they've not had to deal with before. So to see the government doing that it's thoughtful. It's thoughtful of the government. However, it's more of a short term. After the 2 months, what happens? Do you want to have it in place? We just said your fiscals are good. Do you want to have a subsidy in quotes draining the extra funds you're able to get, and it's making your fiscals look good.
Right.
I don't think South Africa will want to be in that position. So even though there's a short-term, there's this short-term system for popularity's sake, there should also be long-term measures. So far, the trend in South Africa has been investors are moving out of the refinery business. Many refineries are shut down, contributing to unemployment, and so you have to import the impact of exchange rate, the dollar exchange rate, the rand depreciations here and there. Luckily, it's been a good year for the rand. But I mean, if you have a situation whereby the rand is depreciating, it also filter into oil prices. Many of this would actually be eliminated if we had more local production capacity in South Africa. But that's not happening now because the world is pivoting to fossil fuels and nobody wants to deal with dirty crude anymore.
Right.
So it's the government needs to find a more long-term means to be able, because the country is actually quite vulnerable. It's not just oil. It could be anything else. There could be war in another country and prices go up, and then they'll still. So there needs to be a more sustainable. There needs to be a more sustainable structure whereby the economy is cushioned from such external shocks. And I feel it has to come from internal. There needs to be more refining capacity in South Africa. That's when I would know that the government is serious. But I mean, this one is just short term. At some point, they wouldn't want to be in a situation whereby they're not able to come to the capital market because of subsidy clause and all. Nobody wants to be like Nigeria with a subsidy overhang. So yeah, in the short term, it's good. Long term, it needs to be more structural.
Mosope Arubayi, economist at IC Asset Manager. Thank you so much for taking us through South African economy. Appreciate your insight. Great stuff.